Welcome back to Investing Talk Podcast.
Good to be back.
Today we're tackling a question that's definitely buzzing around. Is CleanSpark a good time to buy right now?
Lots of interest there.
Yeah, exactly. Before we get into it, please remember to subscribe, like this discussion, and maybe drop us a comment below.
But yeah, definitely let us know if there's another company you want us to look at. Just pop it in the comments.
Perfect. Okay, so CleanSpark. You've been looking at the recent research.
I have. And it's interesting because the analysis really has this dual focus now.
Dual focus. How so?
Well, you've got their core business, right? The big Bitcoin mining operation, which they're known for. Very efficient.
Right, the bread and butter.
Exactly. But now we're looking at that side by side with this, frankly, sudden and pretty major strategic move into AI computing services.
Okay. So that's the mission for you listening today. Quickly get a handle on the financials, what catalysts might move the stock soon, and importantly, the risks.
The risks involved in juggling these two, very different high-growth businesses at the same time.
If you're holding this stock or thinking about it, you really need to grasp both sides of this story.
Yeah, it's a fascinating moment. They're not just a miner anymore. And you can see the market kind of trying to figure out how to value this hybrid. Execution risk is definitely up there.
But the potential reward, too, I imagine.
Oh, absolutely. Huge potential if they pull it off.
Okay, let's start by laying the groundwork. What was happening just a few months back, say in July?
Well, July was really all about the mining side, doubling down on operational efficiency.
Okay.
And continuing their expansion plans, boosting that hash rate capacity, pure infrastructure scale up.
Got it. So focused on the core.
Then August felt more like strategic planning setting in. They started securing more funding options, kind of laying the groundwork administratively for something beyond just mining.
So prepping for a move.
Yeah, seems like it. They were clearly positioning themselves for this diversification before the big reveal.
And that reveal came when? September, October.
That's when the big news dropped, the pivot into AI computing services.
Which is a huge step, right? It changes their whole identity almost.
Completely, from a pure play miner to more of a digital infrastructure company with multiple services.
And they backed this pivot with cash.
They did. They announced a $100 million credit facility. Importantly, it's backed by their Bitcoin holdings.
Ooh, okay.
And they explicitly linked that facility to funding these new AI initiatives, so real capital commitment.
Okay, but hold on. Backing operating capital with Bitcoin, doesn't that add a layer of, volatility risk?
It absolutely does.
I mean, what happens if Bitcoin takes a dive while they're spending heavily on AI servers and stuff?
That's precisely the risk the research flags. It shows they're very confident in Bitcoin long-term, obviously. But short-term, yeah, it definitely increases volatility risk. They get capital fast without issuing more stock, which is good. But their financial cushion is now tied to Bitcoin's price swings. It needs really careful management.
Right. And, we saw other crypto miners try big pivots during the last downturn, and frankly, many didn't work out.
That's a fair point.
So what makes CleanSpark different? Do the sources suggest they have the chops, the management skill to succeed in AI where others stumbled, especially given how competitive AI is?
That's a really critical question. And I think the company's answer, or at least the evidence they'd point to, is in their operational track record before this pivot.
Okay.
The sources highlight those strong Q3 2025 financials we're about to get into.
Yeah.
It's kind of proof that management can execute efficiently at scale.
So the argument is they're building AI on a solid, profitable base, not pivoting out of desperation.
Exactly. They're not doing this because mining is failing. They're doing it arguably because mining is succeeding and providing the platform.
Yeah. Okay, let's look at that proof then. Those Q3 2025 results, you said they were strong.
Very strong. The numbers are pretty clear. Revenue jumped to 91% year over year.
91%. Wow.
Yeah, hitting $198.6 million for the quarter. And maybe more importantly, net income.
Right.
They reported $257.4 million in net income. That's an EPS, earnings per share, of 90 cents.
And that's a big turnaround from losses before.
Huge turnaround. Shows the mining operation became substantially profitable. Those efficiencies paid off.
And the balance sheet, does it support this kind of big new investment in AI?
It does, yeah. Sources say it's healthy.
Yeah.
Good liquidity, not too much debt.
Okay.
Which is crucial, right? It means they can make these strategic investments into AI without putting immediate undue strain on their finances.
Okay, so before we look too far ahead, let's just anchor their current position. Leader in Bitcoin mining, you said.
Yes, definitely one of the top players.
And they're running at 50 exahash per second now.
That's the current operating capacity, yes, 50 EHs.
Why does that specific number, that scale, matter so much for an investor right now?
Well, 50 exahash is just massive. It creates a significant barrier for smaller competitors trying to get in.
Economies of scale.
Exactly. It gives CleanSpark better unit economics, lower cost per Bitcoin mine than most others. And crucially, it's this existing scaled infrastructure. The power, the facilities that they plan to leverage for housing and running these new AI computing services.
Got it. Okay, now looking forward, analyst revenue expectations seem pretty optimistic.
Extremely optimistic, yeah. They're projecting almost $800 million for fiscal year 2025. $798.8 million, to be precise.
Wow.
And then it jumps, again, pretty significantly to $1.15 billion projected for fiscal year 2026.
So the market clearly expects this AI pivot to add a lot to the top line.
A lot, yes. That's the bet.
Okay, but here's something interesting, maybe even contradictory in the material. Revenue soaring, but forward earnings guidance actually suggests EPS might dip.
Yes. That's a really key point.
It looks like it drops from an expected $1.40 in FY 2025 down to maybe $1.17 in FY 2026. How does that work? If revenue's hitting $1 billion, why would profit per share potentially go down?
Yeah, that's the multi-million-dollar question, isn't it? It seems counterintuitive. Yeah. The thinking, based on the analysis, seems to be about margin compression or, more likely, heavy investment spending related to the AI build-out.
Okay, like what kind of spending?
Two main things. First, CapEx, capital expenditure. Buying those high-end GPUs needed for AI is incredibly expensive. Plus, building out or retrofitting data centers specifically for AI workloads. That's intense.
Okay, CapEx, what's the second?
Second is OpEx, operating expenses. They're entering a super competitive AI market.
Right.
That means hiring expensive, specialized talent, AI engineers, data scientists, and potentially they might need to price aggressively at first to win clients.
Okay, so the dip reflects the cost of growth.
That seems to be the interpretation. Those upfront investments in CapEx and OpEx are expected to weigh on the bottom line initially before the AI services really start generating strong profit margins. It's a calculated risk for higher long-term valuation.
Makes sense. So fundamentals seem to support the move, albeit with that near-term profitability question. What about the market? Does the stock chart agree? What's the technical picture?
The technicals actually line up quite nicely with the bullish fundamental story we've been discussing.
Okay.
The stock chart shows a clear bullish trend. You're seeing those higher lows and higher highs consistently.
Always a good sign.
Yeah. And technically, it's trading well above its 50-day and 200-day moving averages.
Which suggests strength and institutional interest.
Generally, yes. Strong momentum, good support levels. For anyone looking at the near term, the analysis suggests a likely trading range between, say, $16 and $23 over the next 3 months or so.
And what about the pros, Wall Street analysts?
Overwhelmingly positive, actually. The consensus rating is a strong buy.
Strong buy. Okay.
And the average price target is sitting around $24.36. You've got backing from some notable firms, too, like B. Riley, BTI, JP Morgan Chase.
So institutional validation for the strategy.
Just like it, yeah. They see the upside in this diversification.
Okay, knowing momentum is part of this story, what specific dates or events should listeners keep an eye on over the next, say, 3 months? Catalysts.
Definitely a few key dates to circle. November 1st is big.
Why November 1st?
That's the Q3 2025 earnings report.
Oh.
It'll be the first real look at the financials reflecting this recent strategic planning phase and maybe early AI costs.
Got it. What else?
Then you've got November 15th. That's more about broader market stuff, ETF rebalancing, quarterly portfolio reviews, that could impact flows into the stock.
Market mechanics.
And finally, keep an eye on December 10th. That often marks the start of an institutional buying period. Could see increased buying pressure if the story holds up.
Okay, useful dates. Lastly, what about the less predictable stuff? Rumors, risks that aren't on the calendar.
Well, the main risk everyone talks about is just execution risk.
Can they actually pull off this AI thing?
Exactly. Can they compete effectively? Can they scale it profitably? That's the big unknown, the main source of speculation.
And the Bitcoin price risk is always there for the mining side.
Always. That impacts their core business resilience and, as we discussed, their credit facility backing.
Any positive rumors floating around?
Yeah, there's persistent chatter, nothing confirmed, of course, about potential partnerships.
With whom?
Big AI players, maybe other blockchain companies. Deals that could significantly boost their AI service offerings or bring in major clients quickly. Purely speculative for now, though.
Right. Okay, so let's tie this all together. Based on everything we've discussed from the sources, is CleanSpark a buy now? What's the verdict?
Looking at the whole picture, connecting all these points, the overall outlook comes across as extremely bullish.
Extremely bullish. Okay.
Yeah. If we had to put a number on it, based on the research synthesis, it's like a 9 out of 10 rating.
Wow. Okay. And the reasoning?
It really boils down to that strong revenue growth, the proven profitability from the mining side providing a solid base, and then layering on this massive growth potential from the AI pivot. It makes the stock seem attractive for a couple of different approaches.
How so?
Well, for short-term traders, you've got those upcoming catalysts to potentially play off.
Right, the earnings index changes.
Exactly. And then for long-term investors, it offers exposure to this interesting convergence of digital assets and high-performance computing power.
But the major challenge, the thing that decides if it hits that $24 target or not, is
Execution. Plain and simple. Can management successfully run both these businesses? Can they keep the mining efficient while scaling AI quickly and eventually profitably?
especially without burning through too much cash, dealing with those high AI operating costs in a tough market.
Precisely, that's the tightrope they have to walk.
Okay, so maybe a final thought for our listeners to chew on.
Yeah, building on that execution point, if diversifying into AI is truly the key future driver for CleanSpark, what specific moves do you think they need to make? Like what strategic alliances or maybe even acquisitions, buying a small AI team perhaps, or landing a cornerstone client contract? What do they need to do in the next, say, 6 months to really solidify their position?
And how would that move impact the expected dip in earnings per share we talked about?
Exactly. How might a specific strategic move accelerate profitability or maybe deepen the investment cost initially? Something to consider as you form your own view.
A great question to think about. Thanks for breaking all that down.
My pleasure.
And thank you all for tuning in. Hopefully this gives you a clearer picture of CleanSpark right now. We'll catch you on the next Investing Talk podcast.